president picked up on it, and Pambani could tell her, drop this, and
although President Trump doubled down.
I know he did.
This week.
He's mad about too late Powell. So, you know, if not for nothing, he seems to want to extract things from people that don't go along with what he wants. We have seen that movie play out before. French Hill is coming on.
I don't think Jay Powell will step down from that post.
If he doesn't drop it.
If he doesn't drop it.
That's why it's in the president's interest probably to drop it.
I don't think he's stepping down, even if he drops it.
Well, I think he'll step down if he drops it. And French Hill's going to make the case that, look, Jay Powell's a man of integrity. There's no way that the testimony in front of Congress rises to the level of a criminal probe. We got to get rid of this. And in the back of my mind, I think it's going to happen within a matter of weeks.
I hope so.
Yeah.
You hope that Jay Powell steps down?
No, I hope that the
probe gets dropped and things move forward.
I don't think there's a legitimate.
Correct, but I'm not so.
Just to be stubborn, he's going to leave, unless he doesn't leave
because by the way, then that
you think he's going to be vindictive back to President.
I don't speak for Jay Powell. I believe that Jay Powell's position. I genuinely believe Jay Powell's position is by trying to orchestrate some kind of deal where he steps down in return for not having to.
I don't think that's what he's doing.
Anyway.
I think he feels like. I know. I think that he feels like he can't. I don't know what he feels like. But my guess would be. He feels like he can't step down when he feels like the Fed's independence is still under question. I would imagine he feels like he cannot possibly step down if he feels like the Fed's independence is still in question.
But the normal way things work is he doesn't stay after he's not Fed chairman anymore. So,
well, but he could.
But he
could. But the reason that we're even talking about it is because the specter of that investigation is causing people to say he might stay.
I don't know if it's a quid pro quo as much as it's a feeling like the threats of the Fed.
Do you think he's just the damage is done? He's mad and he's going to stay.
I think the damage is done because the alternative is that it is a quid pro quo.
Trump would make life miserable for him, even more miserable.
But he is not going to want to see the Fed come under more of an attack. I think there's that, too. I do think that Jay Powell has been operating from the perspective of wanting to do what's best for the Fed.
I'm sure he's going to say, you know, Warsh, you want to do these things? Have at it. Get another one of your, another person like-minded with you with Trump on the board, and let's see what happens. I'm sure he's ready to rest on his, legacy.
I'll take the other side of that, but we'll see where it happens.
Welcome back, everybody. Let's take a look at the futures. You do see the Dow futures up by about 127 points this morning. S&P futures up by 7.5, but the NASDAQ sticking flat despite the declines that we saw yesterday. Down more than 300 points, the biggest declines we've seen since January 20th. Joining us right now to talk about it is Stephen Parker. He is the co-head of global investment strategy at J.P. Morgan Private Bank. And Stephen, we're sitting right at market highs for the major averages. And yet, every time there's a little bit of a concern about what might be happening with technology, you do see the pullbacks kind of quickly. Again, we are not talking about being far from all-time highs for any of these major averages, but what did you think of the action yesterday in the software market?
Yeah, I actually think what we're seeing in markets so far this year is very healthy. I think a lot of people would have been skeptical at the idea that we would be sitting near all-time highs, despite the fact that the tech sector is the worst performing sector in the S&P and has fallen more than everyone else. This broadening story that we are seeing is really reflective of the anxiety that investors have had over the last couple of years. It's been all tech all the time. People have been worried about concentration risk. Now we're seeing a rotation. It's about a broadening of the recovery story. Cyclicals are picking up the slack. And it's not just the AI infrastructure plays and the hyperscalers that are driving markets higher. It's actually the AI beneficiaries. That's going to cause some disruptions, particularly in sectors like software.
So where do you invest at a time like that?
Yeah, I think we still like the tech story. We think we're probably in for a period of consolidation as tech companies continue to grow into these earnings. But there's also opportunities more broadly, whether you're thinking about cyclical opportunities in the U.S. We really like the industrial story, the power story, but it's also a global story. You know, the leadership that we've seen from non-U.S. markets that really started last year has continued into this year. And if you're looking for opportunities that may not be as specifically focused in technology that are beneficiaries from this global broadening, markets like EM, particularly Asia ex-Japan, we think are going to be big beneficiaries.
Your base case for U.S. equities, looking at the S&P 500, is high single-digit returns. You're thinking 7,200 to 7,400, but your bull market case is 8,000 to 8,200.
Yeah.
What has to happen to differentiate between your base case and your bull case?
Yeah, so the base case is really based solely on earnings growth. We think we're going to see low double-digit earnings growth, and we actually think you see multiples come in a little bit given the starting point. To get to that bull case, we need a couple of things. We need this broadening cyclical recovery to happen. We need to see earnings growth not just out of the tech sector, but other parts of the economy. We need to see some of the productivity benefits from AI turn from talk into action when it comes to companies. And we think if you get that, investors will be willing to pay that higher multiple. You get potentially a little bit of multiple expansion on top of mid-teens type of earnings growth. That's what gets us to that bull case scenario.
We have seen some wobbles in other areas of the markets, too, particularly what we've seen with gold and silver. Gold is a conviction buy for you right now. Even though it's trading back above $5,000 an ounce, you think it could go above $6,000 an ounce.
We do. We've been bullish on gold for the last 18 months or so. It's been a great call for our clients. The idea behind the gold trade was really one around diversification. Diversification of dollar exposure for central banks, for institutional investors, for individuals. We've seen that story play out, and we think that demand is going to remain strong. Then on top of that, you get the diversification benefits against heightened geopolitical concerns, inflation. Gold checks a lot of boxes, and we think that that rotation and that demand is going to stay robust.
Does silver make sense to you? It's up 170% over the last year.
Yeah, we're more cautious on silver. Silver feels like it's the more speculative way that investors are trying to play the precious metal trade. Silver also has a challenge because, one, it's a smaller market, so it's hard to move in size for these central bank buyers. Two, it has a lot of industrial uses, and when the price of silver goes up, the solar panel producers are going to start asking questions around whether there's alternatives. And so, we're more cautious on silver. We prefer gold as the core diversifier and see upside there.
There has been a bit of a sell America trade over the last month or so. You don't buy into that. You don't think that's here to stay?
No, we don't think it's necessarily a sell America as much as it is a buy less America. After the last decade plus of American exceptionalism in markets, you've seen U.S. stocks go from 45% of the global equity market to 70%. Investors are very long dollars. And in a world where policy uncertainty in the U.S. is increasing, we started seeing it last year. We think this is a rational rebalancing. But ultimately, we think the fundamentals, the growth drivers, inflation is under control here. And we think the dollar is ultimately going to end up stabilizing and flows will come back to the U.S.
Do you have a bear case in the markets? I mean, because your bull case is pretty aggressive.
Yeah. The bear case, the easiest way to get to a bear case is if something stumbles in the economy and we see a recession. Traditionally, that's going to translate into something like a 20% drawdown in equity markets. Yeah. We see that as a very low probability event. Yeah. What we do expect is that there's going to be volatility. When you have a starting point where valuations are elevated, we've seen it in some of the tech reports, companies that are beating are still seeing their stocks sell off.
With AMD.
So I think the bigger risk is potentially just expectations being too high and some time needed for markets to grow into those expectations.
Okay. Stephen, thanks for coming in.
Thanks.
And thank you, Carl and Sarah. Welcome to the Halftime Report. I am Frank Holland in for Scott Wapner. Front and center at this hour, reality check for the rally. More software weakness weighing on the AI trade, while a number of sectors beyond tech, they reach new records. We're going to break it all down with the investment committee. With me for the hour, we have Joe Terranova, Liz Thomas, Jenny Harrington, and Jason Snipe. Before we start the conversation, a quick check on the markets. You can see a bit of a mixed picture right now. The S&P pulling back just about 0.5%. The NASDAQ down about 1.5%. Small caps down more than 1%, but the Dow actually up over 0.5%. We're going to hit on some Dow names actually hitting new records in just a bit. But first, Joe, I think we got to start off with this software weakness that we're seeing and what it's been doing to the broader market, some of this weakness, the idea of AI disruption. We all thought AI would disrupt things. I guess we didn't think it would be software. What do you make of this, the fact that it continues? And today, Palantir actually caught up in the selling as well, down double digits, along with a bunch of other names in the software space.
Well, as it relates to Palantir, after earnings yesterday, I was somewhat disappointed in terms of the price reaction. I would have thought it would have had more of a significant bounce. I think the investment community maybe has a degree of fatigue surrounding AI and all the tailwinds and stories that we heard towards the end of the year. But I think for the market itself, look, we've gone to a lot of different places, but if you just look at the S&P 500, we're literally in the same place we were on October 29th. So the market just continues this internal rotation, and as the internal rotation is happening, the volatility is kind of elevating. I don't think this is much about, okay, we're seeing a significant overall decline in the broad indexes. It's more about the rotation. It started last year. Software went into the semis, then it went from large cap to small. You've seen it rotate in terms of the sectors, tech going into industrials and energy and materials, and specifically as it relates today, this is the interesting rotation. Today, the rotation is momentum into quality. If you look at the various momentum ETFs today, you're going to see a precipitous decline in each one of those momentum strategies. So a single momentum strategy right now is not working. You need kind of a little bit of that overlay on top of it. That's why we have the quality overlay that acts as a shock absorber. But right now, it's momentum. It's the momentum factor rotating into the quality factor, and that is weighing on a lot of the leaders from 2025.
Yeah. Liz, momentum's obviously slowing down, as Joe just pointing out. The MTUM ETF down over 3.5%. We're also, you and I were talking before the show about the SPMO ETF as well, pulling back today. The idea of this momentum shift, it seems from the AI economy to the real economy. We're going to handle some of those Dow names. Is that healthy for the market? Is that something investors should just lean into?
Well, so let's go back to software for a second, and then I'll answer the question about momentum broadly. But software right now is really a sentiment trade that's going on, and there's a lot of indiscriminate selling going on throughout the space. Yes, there was an announcement that seems to be a disruptor in the software industry right now, but it's not going to disrupt everything that is in, let's call it the IGV software ETF, right? We still have cybersecurity names in there. We've got a lot of stuff in that software ETF that is not necessarily related to some of this disruption. I think that a lot of the selling will get to a point where it's overdone, and because it's so broad-based, we will find out that this ended up being a decent opportunity. Will software get disrupted and will things change? For sure, but nothing has changed yet, and nothing's really changed in the macro picture as of now, so I think some of the selling is just getting a little ahead of itself. As for the momentum factor, I mean, obviously some of what's going on in tech under the surface is weighing on momentum, but this is a reason why I made a call for cash-rich companies this year. There's an ETF out there, COWZ, the Cash Cows ETF, that quality was going to be something that investors started to pay closer attention to, things like fundamentals, and that's why we're buying certain stocks. That's where the rotations are coming from. Again, back to software, earnings have been revised higher by 10% since September, but the group is in a 30% drawdown. The fundamentals aren't matching up with the price action there. But I think in a lot of other parts of the market, the fundamentals are starting to match up with price action, and that's what you're seeing with a little bit of this quality appetite.
You know, you're talking about sentiment, obviously, which is really hard to gauge. It's hard to get a handle on. B of A, for example, came out and said SAP is being unfairly punished, basically. They're saying they have so much proprietary data that this sell-off shouldn't be as impacted by the sell-off because of their business. As an investor, should you be trying to find those names right now or wait for it to settle out and then buy the names that are lower, or try to buy now and figure it out?
Well, full disclosure, the last time I was on Halftime, my final trade was the software ETF, and that has not gone well since then, because that was 2 weeks ago.
We appreciate the admission.
So I apologize for anybody that got in at that point and is living through this right now. But when this happens, when something so big, a parabolic move to the downside happens, that's not the time to freak out and sell the position. And like I talked about, we've had some broad-based selling since then. I think it's a little indiscriminate. So is it time to go hunting for specific names? Since it's been indiscriminate selling, I actually think that a more broad-based ETF would be a decent entry point once things have bottomed. Bottoming takes a while, right? We might hit what I would call a near-term bottom at some point in the near future, but the bottoming process will probably go on for a while, and we don't necessarily have answers to what this disruption looks like. We're also waiting for earnings on a number of software names this week and next week, so there's likely to be more volatility to come. Also, we've got this uncertainty going on with a new Fed chair coming into office, and that's not going away anytime soon either. So I think that software names and just tech in general is going to see a a lot of churn under the surface for probably the next couple months. So you could start toeing into some of this now. It may get worse before it gets better, but it's hard to believe that with this much multiple compression, we're at about 32% multiple compression in software right now. Hard to believe that at some point that doesn't stall out and reverse upward.
All right, over to you. Are you starting to research, looking for possibly names to buy? Are you writing off this sector completely? How are you viewing the broader space and the impact it's having on the broader market?
Yeah, I mean, for me, Frank, it almost feels like a protracted DeepSeek moment that we had last year, where headlines are being developed. Obviously, yesterday was kind of this Anthropic news on what innovations are happening in legal, and maybe you don't need counsel in certain respects to review contracts. We'll see. But for me, software, to Jenny's point, it still is expensive, right? So it's still 8 times sales. The software complex, and I think you have to be discriminating in terms of what names you're looking at. Also, to Liz's point, I think it can go longer, right? I mean, a lot of these stories. So it is, for me, a potentially inching into the story. But I think the main point for me, as I look at the traditional SaaS model, there could be some harmony with AI agents and the traditional SaaS model, where these two technologies could work together in a productive way. So yes, there will be winners and losers, but you just have to continue to pay attention. I wouldn't be selling here, but I potentially would be inching in going forward.
I want to move on to the chip space. Looking at AMD, shares pulling back quite a bit today. You can see they're down more than 16%. The street saw the guidance is a bit soft. Lisa Su came on our air, talked a lot about their AI server system, Helios, in the back half of the year, possibly being a big boost to the company. Joe, you own this name. How did you view this report? Do you think this is simply an overreaction, maybe fueled by some of the weakness in software that seems to be pushing this down, or is it just the fact that it just wasn't good enough?
I don't think I need to respond with a dramatic, lengthy answer defending it. It's fatigue. I mean, that's what it is. It's fatigue. It's pulling back. It's had a significant move since April. It's pulling back into the critical supportive moving averages. It's going to remain in the ETF for us. It's been a strong position. And I think it depends on where you've entered AMD. If you have a degree of runway where you entered into this in the second quarter or third quarter of 2025, you have more room to play with where your exit ultimately may be. But unfortunately, if you were late in this in the fourth quarter or at some point more recently, you might be staring at what is an unprofitable trade. And you just have to manage the risks surrounding that and understand ultimately that there is going to be exhaustion surrounding what has been such a compelling, strong tailwind from markets over the last several years. That powerful force dissipates at some point. It doesn't go away, it just dissipates, and I think this is a reflection of it. It needed to exceed the wildest and strongest expectation, and it did.
All right. By the way, Wolf out with a note saying they would use tech weakness to buy AI-related semis, basically saying, looking at this weakness because they feel like that chips are unfairly being punished. Do you agree with that take when it comes to the chip space broadly?
I think in certain instances that applies. One name that might work towards is Texas Instruments. Texas Instruments, which we added to the portfolio recently, that's a little bit of an AI story, but that's more about a recovery in autos. That's more about a recovery in its core business, which is analog chips. And again, this isn't a stock that has rode along with the tailwinds of the semiconductor industry over the last several years. This is a stock that's had a very strong rally, up 40% from November. Why? Because it's seeing the turn in the core business. You could say, okay, it's an improvement of the economy, pick whatever reason you might cite for that, but it's industrial automation, it's improvement in the auto industry. To a degree, it's AI, but that's really where the strength is coming from here.
All right, Jason, you own Qualcomm, actually reporting later today. With the idea of fatigue in the market right now impacting AMD by a lot, shares down over 16%. How are you looking at this upcoming earnings report and just this company in general, actually trading higher going into its earnings, up about 1 3/4%?
Yeah, so they had a downgrade a couple weeks ago by Mizuho, and it was really kind of this story that we've heard a lot about Qualcomm with kind of Apple moving away from their business, and obviously the $28 billion handset business for Qualcomm, and $8 billion of that is Apple, right? So that is a significant story. But I think the other thing for me is what has started to materially grow is IoT and the auto business. And again, we probably need those numbers to grow much faster than they have over the last couple of quarters, even though they're growing at almost a 30% clip. We're going to need to really see those numbers continue to spike to potentially offset what that loss might look like for Apple. And I think it is somewhat overblown. I think that's going to take some more time. But, you know, listen, Qualcomm has definitely underperformed the market and underperformed the semi sector. So we're going to need to see some catalysts there for it to continue to run.
We're looking at the broader chip space, Liz. Outside of memory, where there's a shortage, and just heard an announcement today from one CEO saying there's going to be a shortage until 2028, basically. How do you view the other areas of the chip space? Cyclical sector, we've seen huge run-ups. AMD's one example, of course, NVIDIA's another one. How are you viewing this right now? Is this possibly the time in the cycle to take some money off the table, or do you ride out this volatility?
Well, so first of all, to Joe's point of fatigue, yes, I think that's the case. I think that's happening in the AI trade broadly. I don't think that's just even happening in the chip space. And the rotation that we've all been talking about and that many of us have been hoping for, the money has to come from somewhere. And a lot of the money has come from the stocks that took us to the point of highs in, you know, the big 10 names in the index, highs in all of those AI darlings. Well, now we're seeing some of that come out, rotate into other places. I think that's part of why we see the Dow as the only major index that's up today. Traditionally, I would look at the chip space versus software and say it's a cyclicality signal. Right now, we're seeing software having underperformed semiconductors by 20%, right? And Jonathan Krinsky has pointed this out just recently. There's such a wide spread between the performance of semis and software right now that at some point there's got to be some mean reversion just from a technical standpoint. Now, that might mean that semiconductors have to come down, or it might mean that software has to bounce, maybe a little bit of both. I think semiconductors, broadly speaking, in the AI trade will continue to be an okay place to be, but if you're trading these names and not investing in these names, this is probably not the right time to do that.
Totally agree with what you said. The AI fatigue is not just isolated to semiconductors, but I also think it's interesting because if you're sitting out there and you're looking at the market from a macro perspective and you're the bear, and you look at what has unfolded in the market, the correction in crypto, the correction in precious metals, the significant precipitous decline in software, technology kind of rolling over, momentum rolling over right now. But guess what? The S&P 500 is still in a pretty good place, and this really has not damaged the prevailing bull trend that's in place for the year.
I think we're about 1.5% away from a new all-time high, so still within striking. I mean, it could even happen today. Unlikely, but it could even happen today.
It's just the rotation is so dramatic this year, and you know where my focus is. It's always kind of more value, old economy. And you look at the Schwab High Yield Dividend Index, or ETF, for example, the ticker's SCHD. It's up 13% for the year. That's wild.
Well, people are looking for safety.
But I'm just saying, like the dramaticness of this rotation is, to me, quite powerful and extraordinary. Who knows if it lasts past the first quarter? I'm enjoying it now, but it really is interesting. I
think it's reflected in the elevated volatility. VIX at 19. If you're a hedge fund, if you're a tactical trader, this is a great environment for you right now. You're doing well.
And welcome back to halftime. Let's talk a little healthcare. It was one of the biggest leaders in the S&P into the end of 2025, but since it's lost a lot of momentum. Several names reported earnings, including Eli Lilly, AbbVie, and more. Why don't we start with Lilly, Joe? Those shares up over 8% right now. Really strong outlook when it came to their GLP-1 drugs, Zepbound and Mounjaro. What did you make of the quarter? What do you make of the moves in this name?
Spectacular quarter, that's for sure. The positive momentum was well entrenched in the name. That's the primary reason why we added it on the most recent rebalance. We took overall healthcare up significantly. Healthcare now has a double-digit weightings. It's not just Eli Lilly, it's other names like Merck, which is jumping today, posted earnings a couple of days ago, very strong. We added Gilead. We already had ResMed. We added Vertex Pharmaceutical. I think you know that one, Jenny. Insight is another name in Regeneron. So we got very active and aggressive in terms of these healthcare names, whether it's the GLP-1 drugs where we're seeing remarkable resiliency and strong demand, whether it's the defensive orientation of the sector overall, which in the fourth quarter was the leading sector. Right now, healthcare has stepped forward, and I think you're going to see more accumulation in the financial services industry of the sector, and certainly Lilly's one of the leading names.
All right, another name we're looking at is AbbVie. Jason, you own this one. Big rebound in Botox sales helping this name.
For sure, and it's obviously going the other way, down 7% after the print this morning. Listen, it was a double beat. Skyrizi and Rinvoq were obviously good numbers, but this is a call on what's going on with Humira. Those sales, at one point it was 25% of the business. All right, so those sales continue to decelerate. There was a rumor a couple of weeks ago about this buy on Revolution. Obviously, that was a rumor and not true, but I think it goes to this idea that there is some interest potentially with an acquisition. Patent cliffs are a real thing. We've talked about biotech a lot over the last couple of weeks. So they need to continue to improve the pipeline, although these other subset drugs are doing well. I think that needs to continue to grow.
All right, Jenny, you're about to pipe in. I'm going to get to you on GSK. Yeah. New CEO, but speaking of patent cliffs, they're facing a patent cliff when it comes to the HIV portfolio. The quarter was good. Shares up just about 7%. What do you make of the outlook? And also just the fact that there's a new CEO taking the helm of this company.
Right. So the new CEO does make us a tiny bit nervous because the previous CEO, Emma Walmsley, was the only one who actually delivered consistent earnings, or consistent expected earnings and met earnings in the last several years. But here's the bottom line, and this goes back to Liz's almost like opening comment, which is when she shifted her stance on where money should be going in stocks, you said you wanted to look for companies with lots of cash. Mm-hmm. And all of these companies, like beyond just GSK in our portfolio, but Regeneron in our portfolio, Pfizer, Bristol Myers, they all are minting cash. So Bristol Myers, for example, has $12 billion of free cash flow being produced this year and next year. Getting back to your Glaxo question, leaving the CEO alone, you have a company that still trades at 10.5 times earnings and has decent 6, 7, 8, 9% earnings growth ahead. So I think really that the place you want to, or the reason that these are attractive right now and the reason many of them are having decent years, like Glaxo's up 16%, Bristol and Pfizer are up 5%, is because of that cash orientation. And as we see the market and as we see market participants back away from heavy risk taking and see their ability to take serious risk diminish, that we see them move into areas of certainty with cash flow. So I think this is just more in line with the macro call, even more than stock specific.
All right, some good results from some names after earnings, and also AbbVie pulling back, obviously. But Liz, I want to come over to you. What do you make of the healthcare trade right now? The fact that we're seeing this broadening that everybody seemed to want last year, but it's not benefiting healthcare. It's benefiting energy. It's benefiting a lot of other sectors. But the healthcare sector only up about 1/3 to 0.5% so far this year.
Yeah, I think that'll change as the year goes on. So it started to work at the end of 2025, but the broadening out came in the form of pharma and biotech companies doing really, really well. Biotech did awesome through the end of 25, and that slowed down a little bit into 26. But to be fair, it got overbought, right? A lot of people got into it towards the end of last year, and it probably was due for a little bit of a pause. If you look at the industry groups under the surface of healthcare, pharma and biotech is still doing okay this year. It's in one of the top 10 industry groups in the index, but you've got things like healthcare equipment and services that are dragging the sector down. So I think there's going to be dispersion in the sector under the surface, but as the year goes on and investors continue to look for more growth opportunity outside of tech, given all the churn that's going on there, pharma and biotech continue to be a beneficiary of that, in my opinion. Healthcare is one of my sector calls for 2026. I stand by that. It also tends to do well in midterm election years, which we're not even really talking about those yet, but we will be talking about those come summer. And healthcare tends to be one of the better sectors throughout that period.
I wish Liz would take it easy on my XBI position. Jason, I think you were in biotech as well, and I was one of those people that was aggressively buying at the end of last year, but she's 100% right. You've seen the price appreciation moderate, and there's been this rotation within healthcare. I think XBI is down close to 3% today. So maybe where the opportunity was at the end of the year, that's moderated significantly. I think it's time when you're looking at the biotech trade to maybe analyze the position and protect the position with some form of a stop loss.
All right, let's get to some more committee moves. Joe, walk us through your new buys, two pretty interesting ones.
So the first one is Corning. I purchased it on Friday, the day that we did the rebalance. I got it around somewhere around 104. I've talked about this name over the last several weeks. I like the deal that was done, $6 billion as it relates to fiber optics and Meta. You're talking about a company, though, that already has significant market share as it relates to consumer products and premium glass. So they really just continue to grow the market share there. It's got a reasonable valuation. I know Jenny would appreciate that. And I think this is a name that really has not participated. I like names that have not really participated in the full duration of the AI tailwind if you pull it back over the last 18 to 24 months. This is a later entry, and it's the Meta deal that really was the primary force. So I took a position, a smaller position relative to some of the positions that I have currently, only because of the overall environment. As it relates to TKO, TKO was in the ETF. It was removed from the ETF, but when I say it was removed from the ETF, if you think about owning 125 names and say to yourself, okay, they're not all created equal if you're scoring them based on rules. You're going to have one like NVIDIA, which is the #1 stock. You're going to have a top 10. Then you're going to have a bottom towards 125. This barely missed the cut. I love the growth that the company's exhibiting, 30% revenue growth. Free cash flow generation continues to accelerate. I like the story. I like the name. They report earnings at the end of the month. So again, I took a little bit of a small position there as it barely slipped out of the ETF.
All right, TKO Group shares up just fractionally right now. We want to move on to Uber. Shares are lower, as you can see right here, after an earnings miss. The company reporting 20% revenue growth for the fourth quarter. Start with you, Jason. You own this one. Again, shares down about 3.5%. Miss on mobility. They beat on delivery. How do you view the quarter?
Yeah, so delivery was up 30%, mobility was up 19%, and to your point, Frank, you mentioned that revenue was up 20%. I think, the big thing for me is they continue to invest in autonomy. They've structured a deal with Lucid. They structured a deal with Waabi, which is an autonomous truck company that I think is going to be accretive in the long term. I think there's a little bit of concern around profitability guidance going forward, which is pulling the stock a little bit here. But it is down about almost 20% in the last 3 months. The last 6 months is down 15%. So I think going forward, we will see price appreciation. It's just kind of watching these investments filter through to this price action.
And we are back on Halftime. Senior markets commentator and overtime co-anchor Mike Santoli joining us with his midday word. Mike, we're spending a lot of time talking about software, but I want to point out it was actually Joe that saw the big upside move when it comes to oil on U.S. and Iran tensions. What do you make of that?
Well, obviously, it's not the reason you want to see oil go up, but it's sort of feeding into really the torque of this rotation toward basic materials, energy, and cyclical. So the market has not, in a broad way, reacted very much to these little eruptions of potential geopolitical tensions. So I think it's kind of a show-me situation in isolation. But when it comes to the overall kind of rotation you guys have been talking about that really is the one topic of the market, I think you can be impressed by the resilience of the market, the ability of the cyclicals to overtake the weakness in secular growth stocks. It's small over large, it's value over growth, it's everything people think is virtuous, and it's a less concentrated market. I would just focus on how much energy it's taken in terms of buying power. Very strong flows in January. We're using up the seasonal strength of January into February, and you kind of have an S&P that's like moved 0.5% year to date. So it's impressive under the surface. I just do question how seamless this can remain with a VIX at 19 and some of the violent moves you're seeing in individual stocks.
Yeah, by the way, some of the oil majors, Chevron, Exxon, also moving higher. Looking at Exxon up about 2.5%. Joe, you were the one that flagged the move. Just your thoughts on the oil trade. You have a question for Mike, possibly.
I think Mike perfectly stated the environment, and it really has been over the last several weeks a very dramatic and aggressive move into energy names. I think ExxonMobil, another all-time high today. The refiners are trading well. So you're seeing capital that's being rotated in there. I would ask Mike, how much skepticism does he think has been unwound? Because there was, for the better part of the last year and a half, tremendous skepticism any time that energy and materials trade looked like it was beginning to revive itself.
I mean, I think a lot of it's very hard to separate out, Joe, how much of it is people genuinely sponsoring these groups and thinking like you can own them for a long time, and how much of it is all the money flowing toward laggards of last year, under-owned parts of this market, and actually stability, frankly, value and stability. If you look at staples, if you look at low volatility stocks, they're making a move against the rest of the market. So I do think in general, there's a little more of a sense out there that maybe we've gotten to a floor in crude, that maybe you have pretty disciplined industry still. And, you don't mind the longer-term dividend flows off this. Regulatory is going to be helping them. And then this global reflationary dynamic, I think, also does have some believers. So whether that requires dollar down, rest of the world going up or not, I do think that, that remains in place. And I think it's going to stay entrenched until it's disproved. And we're not there yet.
All right, Mike Santelli with his midday word. Mike, always good to see you, and we'll see you coming up on Overtime. Coming up next here on Halftime, our top calls of the day, including a bullish note on one of this year's top performing sectors. We'll see where the committee stands. That's coming up right after this break. Stay with us. And welcome back to Halftime. Wolf out with a bullish note on materials. Liz, this is one of your sector calls for this year.
It is, and I am still bullish on it. You never really want your calls to go that well by the end of January, but I'll take it. It's still, we got 11 more months to go, but I'll take it. So bullish on materials. First of all, it is a very small weight in the S&P 500. So if you're worried about concentration, you do not have a concentration risk in materials, and I think it's very under-owned. It's expected to be the second best sector in the index as far as earnings growth for 2026, producing expectations of 24%, bested only by technology. So I still think it's a good opportunity fundamentally, not to mention resource nationalism that's going to continue, I believe, through the rest of the year. And a lot of the volatility that is presented in material stocks has served as an opportunity for investors. So I'm still long, strong, and bullish.
All right. And we're back on Halftime with final trades. Jason Snipe, you're up first.
I like biotech here. I think the momentum, obviously there was a lot of momentum towards the end of the year, slow down some, but stay long here. I think there's an opportunity.
Jenny.
All right, going to Liz's materials call. Amcor reported last night great numbers, earnings growth on track, 5.5% yield.
Liz.
Emerging markets going to dip outside the U.S. for this a little bit. I think a weak dollar environment stays, and international stocks tend to do better in that environment. I think there's a good opportunity in emerging.
Jared T., you got the last word.
In the industrial sector, we've added several names. We are overweight, and Emerson Electric is one of the favorites. EMR is the ticker symbol.
All right, before we let you go, one more quick look at the markets right now. The Dow just creeping back into positive territory. You see the S&P pulling back 0.75%, the NASDAQ down 2%. That does it for Halftime.
Hello, everybody. Welcome to Blue Cloud Trading. I'm George. We just saw some clips from CNBC earlier today. And in this video, we are going to take a look at the majority of the stocks that they talked about. So we're talking about 29 stocks and ETFs that are all mixed up in here. I've already reviewed them all. We are also going to take a look at some of the Mag 7s like Tesla, Apple, Meta, Microsoft, Netflix. We're going to look at the index ETFs that you see right there, the Dow, SPY, Qs, Russell 2000, the VIX, the Euro stocks for our European friends. And then guess what? We've got 9 stocks and ETFs right here from our members that I'm going to go over. Okay. And before we get started, let me just show you guys what's happening in the market today, or has happened in the market, because it's currently 5:54 p.m. Eastern time. It's a lot later where I am. I'm currently in Spain, but it is 5:54 p.m. Eastern time currently as I'm recording this video. Now, the markets were, as you can see here, the Dow was the only index that was up 0.53%. NASDAQ down 1.51%. You can see it dropped here throughout the day, and around 1 p.m. it started to recover a little bit. S&P 500, same thing, down 0.51. Not as bad. But it, yeah, you can see that those last minutes there did drop under that little consolidation area. And the Russell 2000 was down 0.86% today. If you look at the heat map, we're going to get into the technicals of those stocks and ETFs that they talked about in a few seconds. I just want to show you guys how the individual stocks performed in the S&P 500. Now, NVIDIA down 3.41%, Broadcom, Micron, look at Micron down 9.55%, AMD down 17.31%, huge drops. Google, Meta down, Amazon, Tesla down, Apple was up 2.6%. A lot of the healthcare stocks did pretty okay here. Like Eli Lilly was up 10.33%. Merck was up, GILD, Amgen was up 8.15%. Berkshire was up 2.04%. A lot of the financial stocks did well. The financial stocks did pretty well, like JP Morgan, Visa, MasterCard. But the capital markets like Morgan Stanley, Goldman Sachs, they were down. Robinhood was down 7.41%. Energy stocks did well. Basic materials were mixed. Yeah, consumer defensives did well once again. You can see some of the home improvement companies like Home Depot, those were up. McDonald's, Starbucks. Anyway, how about what themes? So let's look at this new segment that I like a lot, the themes segment, which shows the specific types of stocks. So under transportation logistics, for example, we can see that rail, air cargo did pretty well. Trucking, Under semiconductors was the analog and wireless. Under software, there's the list right there. CRMs were up a little bit. Real estate and REITs did pretty good today. Even office was up 1.34%. And for energy, no, this is under, I'm sorry, nanotechnology. Let's see the products. So what are some of the stock companies in there? There are some of the ticker symbols. You can see how they did. Um, and under housing, tourism, I like this. I like this new themes concept. Let's look at the ETFs. Well, since the markets were down, the inverse ETFs did pretty well today. You can see SQQQ was up 5.19%. Silver was up 2.88. We're going to look at that in a second. Financials, there you have it. XLF, KRE, TZA was up. It's an inverse ETF, by the way. The cryptos were down. Look at this. Bitcoin down 4%. Anyway, all right, let's get into the stocks. We'll start off with the index ETFs. And if you guys remember, if you watched my video, if you happened to have stumbled upon my video yesterday, you probably remember that I mentioned that the only index that was looking bullish yesterday, by the way, was the Dow. Why that? Why Dow? Why just the Dow and not to the other index ETFs? Well, because we have a secret weapon here, the Ichimoku indicator. Now, let me get rid of some of these lines for a moment, just temporarily, so I can show you guys what I'm talking about. This indicator, what does it do? It tells us the strength of the trend. Now, granted, if you look at this, you can see prices, in fact, moving sideways. However, yesterday and the day before, price was above this green line. This is a very important green line. What is that? Well, it takes the highs and the lows of the last 9 periods, divides that by 2. It's the midpoint of the last 9 periods, and plots it right under the candle or above it sometimes. Okay, like it did over here. We want price to be above that. We want price to be above this red line, which is the midpoint of the last 26 periods. So this one's called the Tenkan-sen. That's called the Kijun-sen. All right. Then you've got a very unique indicator here. That another part is called the Ichimoku cloud, right? So that's basically what you see right here. That it looks like a cloud. It's comprised of 2 moving averages. It's the Senkou span A and the Senkou span B. And those, how is that plotted? Let me throw the weekly chart so it makes it a little bit simpler for you to see, since these moving averages are a little bit further apart. You take the midpoint of those 2 moving averages, and if you plot it forward 26 periods into the future, that's where the Senkou span lies. And every day, or in this case, every week that goes by, that line will move. So tomorrow it will move to another, it'll either move up or down or sideways. But this is what creates the Senkou span A. It's that midpoint between those 2 moving averages. The purple line, the Senkou span B, is comprised by taking the midpoint of the last 52 periods here. Unlike over here where you see it's plotted under the candle or sometimes above it, right? The Senkou span B is plotted into the future. So it takes that midpoint of the last 52 periods and plots it back right out there into the future. And why is that? So that it can actually create this cloud. And then they highlight the inside of it. And by the way, if you like this, visually, it's really easy to quickly assess what's happening here. We can see that price is above the moving averages, price is above the cloud, which is very bullish. That's what we're looking for. And then the other thing that's also kind of cool is we also have this lagging line here. What is that? That's the current price in a line form projected 26 periods into the past. And if that white line happens to be above the candle, that candle right there 26 periods ago, we have a bullish situation. If it's under, like it was over here, it's bearish. And you can see how price was dropping there. So when you have all of these elements in line and they're all telling you that things are looking good, then you can sort of trust that chart, okay? Obviously. In fact, you can trust the chart more than you can a lot of the individuals that are on television, for example. Because the charts don't lie and they don't, they're just showing you what's really happening. So here's the weekly chart. Here's a daily chart with the Dow. It's looking very bullish still. I would like to see it now. If I superimpose some levels, these levels here, 496.34, it's based on a prior high, that candle right there. We do need to get above that because right now we're in something called consolidation, right? We're just in a sideways, we're kind of trapped in this little box, and price has been just bouncing around in here, waiting for what? Something, a catalyst, something, maybe a news event that will trigger it to break through with some high volume and some high momentum, right? And when we see that, that's going to be very important because then we can expect that it will continue to move up. Right now, if you look down below, we've got ourselves something called the Directional Movement Index. Now, I've got it at a setting of 9, okay, which is a much faster setting. The ADX is also superimposed here, and that represents momentum. What we're looking for here, the Directional Movement Index, is we want that green line to be above the red line. Ideally, we want that green line to be moving up, not like it is down here, but it is technically still above the red line, okay? We do want to see the red line moving down. So the green line up, red line down, and ideally what we want is that white line at that exact same moment to also be moving up, which is not right now. And that's because we are in this consolidation, right? So there's just no clear direction here, but we do know that we are technically still in a nice strong uptrend on both the weekly and the daily chart, okay, for the time being, at least. And so we can act accordingly, and we can decide whether or not we want to be invested or stay in the, sometimes you just want to sit on your hands and not do anything and just wait it out. Let's wait and see what happens here. Is it going to continue to like just bounce around in this little range? Of course not. At some point it's going to either break to the upside or it's going to break under that 484.39, that low right there, and then we'll know what's really transpiring behind the market. Because the charts essentially are telling us what the buyers and sellers are doing, right? And when we see price just bouncing around, that's all that's telling us is that they have no clue which way to go. Neither the buyers nor sellers are in control here, okay? But we've been technically stumbling up slowly, okay, a little bit at a time. It's a very, very slow progression. So we'll see what will happen. Um, S&P 500, what does that look like right now? Well, on the daily chart, it's still in the consolidation stage as well. If we look at this weekly chart for a moment, you can see these individual candles represent weeks instead of days. And look at this very, very, very tight range of multiple weeks. So again, we don't really have a clear direction here. The market's not breaking down by any means, okay? We're just sort of in limbo, basically. And if you look at this daily chart, today was not a good day, and neither was yesterday because price closed. See that Japanese candlestick there? It closed under the 9 period, and today closed under the 26 period, the red line. It's still above the cloud, all right, but it's just not as bullish as the Dow. Hence why it doesn't have a blue little flag. Typically, if I see a bullish chart on both the weekly and daily chart, I'm going to throw a little blue flag just as a quick visual aid, so I can recognize quickly where to be involved and where to be invested primarily, and where I shouldn't be. If I don't see a flag, like the QQQ, for example, which is down 1.75% today. This one looks even more bearish. Why is that? Because it actually broke and today closed under the cloud. Does not mean it's the end of the trend, okay, for the Qs, but this is not bullish by any means. And if we look at the weekly chart, we are still technically on the weekly chart also consolidating. So there's no clear direction here either. But we are under the 9 period currently. And here's another disturbing little thing that I just noticed here. Look below. Remember what I said earlier about how the green line, we want that green line to be above the red line and moving up, and the red line moving down? It's the opposite here. And the ADX is moving up, which means that the momentum is increasing a little bit to the downside. It's not, 100% going to turn down, but it's not super bullish here. Obviously, if you look at this on the weekly, you look at it on the daily, you look at it on a 4-hour, where it broke under that 200-day moving average on the 4-hour, okay? And the 2-hour, it's not a pretty sight. We have a lower high here and a lower low on the 2-hour time frame on the Qs. Russell 2000, this one's pulled back as well. This one, interestingly enough, has been under the Tenkan-sen for multiple days since January 23rd. Do you see how every time price came to it, it got rejected and stayed under? Okay, all these candles. But it's also finding support at that red line, the 26 period, and that 258.20 level, which is a prior high. So that's a good sign. All right. But again, nothing to do here except for sit in your hands and wait it out and see what really happens. And we might see a bounce and we might see a breakdown. Okay, but we have to wait. So, a lot of I noticed on some channels they were talking about how they feel like Tom Lee is right about this big drop in the markets. There's no big drop in the markets, guys. I just showed you on the charts what's happening. We're in a consolidative stage, basically still. Now, one thing that is also disturbing, though, I will say that on the daily chart here, we spiked a little bit. We were up 3.56%. We re-entered the cloud, but look what happened. It came up to the top of the cloud and then dropped. So the VIX is the volatility index that dropped towards the end of the day. If we look at the 5-minute chart, we had that spike. Here we are on the 4th, right? February 4th, moving up. And around 1:20 p.m., it started to drop, which is coincidentally when the market also started moving up. There's the one, okay, around 1:20. It's the opposite inverse reaction, the SPY and the VIX. When the VIX is moving up, the SPY and the index ETFs tend to drop. But the fact that the Dow was actually up is more significant. Okay, FEZ Euro stocks. How about that one? On the daily chart, that's also still technically in a strong uptrend. We have a series of higher highs and higher lows, but we did stay under that 9 period for 2 days now. And it was just down 0.33, nothing major. And if you look at the weekly chart, it's probably the strongest of the bunch because this one broke through a monthly level, the $66 level, which goes back to 2007, if I remember correctly, right here. Yeah, November 30th or so of 2007 is the last time that we had reached $66 for the Euro stocks. Think about how long ago. Look at all the years that have passed, and here we are above that $66 level. We're at 66.86, and it's holding up. Now, let's get into the rest of these. Now that you understand the rules, we don't really need to spend that much time on each one of these. I can scroll right through these very quickly, very easily, and that's the idea behind Ichimoku. You want your trading assessments to happen quickly and efficiently, and you do want to have a rules-based system, and that's what this does. It actually creates that for you, in a sense, okay? So Tesla is currently on the monthly chart. It's above the moving averages, and it's above the cloud, but if you look at the weekly, we're currently under for about 4 weeks under the 9 period. Okay, on the daily chart, we're under the cloud. So Tesla is not something I'd be touching right here because you can see that it's been under the cloud now since November 27th. Right, it dropped about 6.5% from there. And if you look when it got under the 9 period right here, back on December 26th, it's dropped about 14.8%. Right, so you can see how this can be very effective in helping us to identify what's happening and whether or not we should be considering a stock. Now, Apple, on the other hand, is breaking above the cloud today. It was up 2.6%, but all the elements of this indicator are not bullish yet. We still have the Senko Span A under the Senko Span B, so we have a bearish future cloud. That's where you can see right there that twist took place, the Kumo twist. Kumo stands for cloud. The Senko Span A crossed under the Senko Span B. Now, we also found support this at the $244 level. Do you see that right there? So that's a prior low. Came to that level. Let's see, when was that? January 20th, 21st, 22nd, and 23rd. 4 days in a row. Kept on finding support at that level and bounced. And it broke through the cloud. So Apple is looking good. I like what I'm seeing here with the directional movement index. Notice, remember what I said earlier, right? Green line should be moving up, red line down, and the white line should be moving up. That's bullish. It broke through the cloud. That's bullish. It happened on higher volume than the prior day. That's also bullish. So a lot of positive things happening with Apple on the daily chart, but we still have a bearish cloud. And on the weekly chart, we're also above the Tenkan-sen. We're above the Kijun-sen. The cloud is bullish. The white line, the Chiku span, okay, the current price is moving up. So I do like Apple. I'm starting to like Apple more and more. The only thing that's kind of like I'm a little bit still concerned about is the fact that we have not broken the single span A is still under the single span B. Otherwise, everything is perfect on this chart. In fact, I'll go one step further and say that I also like what I just saw right here with the Chiku span. See how the white line was under price, and that just today got above, but it doesn't get the flag because again, there's one element that's off. And I'm a perfectionist, at least when it comes to entries. I like to try to find stocks that are strong on both a weekly and daily time frame. All right. Meta is pulling back. It's under the 200. It's under the Tenkan-sen. It's down 3.28% today. And I, mentioned how this is not looking particularly great here, but so I wouldn't be looking at this one. If you look at the weekly chart, we've re-entered the cloud. The Tenkan-sen is still under Kijun-sen, so no. Microsoft under the cloud on the weekly. You, you know, personally, I would just skip that altogether. Look at it. Still under the cloud on the daily as well. Hard to identify when that turn is going to change. You cannot pick low. You cannot pick bottoms. Nobody can pick the bottom. All we can do is wait for price to start showing strength. Like back here, you can see this downward channel. All right. What happened? Price gapped up back on May 1st of 2025. Go back to any of your charts and look at May 1st, 2025 in Microsoft. Now, it gapped above that 200-day, that dotted yellow line. It gapped up above the cloud. The Tenkan-sen was above Kijun-sen. If you look down below, folks, down over here with that directional movement index, we're just doing a little back testing is what it's called. For those of you who are new to technical analysis, we're back testing here, folks. We're back testing. Okay, so what we're looking at, do you see this white line is starting to move up here? Right there. That little moment. Look at the volume as well. Do you see how that volume bar is significantly higher than the prior one? We started seeing that increase in volume just as the white line started moving up, and the green line moved up, and the red line moved down, and that happened right around that level. It either happened right there or it happened there. I'm not sure if I think it happened right there because that was the big volume bar. So it started to show the strength the prior day, but we got the signal right there. And some of you might have thought, well, now it's overextended. If you didn't have this Ichimoku indicator, you probably would have been thinking this thing is too overbought at this point. I shouldn't be thinking about it. I shouldn't even be considering it. It's too far ahead. It's most likely going to pull back. But the Ichimoku indicator is telling you no. It's got a lot more room to run. In fact, from that point, if we measure to that high right there, okay, it moved up 30.57% in 3 months. That's the all-time high for Apple. And then it came back close to that level right there. Didn't quite make it to it. And then what happened? It started to drop. And once it got under the moving averages, it dropped approximately 22.8%. So again, this kind of shows you how the indicator can help keep you on the right side of the trade. There's no perfection here. All it is just, again, a visual aid, okay, to help. It's like a map. Think of it like a map so you don't get lost. Netflix, it was finding some support for a little while here at this level, the 82.11. And then look what happened here. Yesterday, it dropped under. I said, oh, that's not good. On February 3rd, Tuesday, it dropped under that level. I said, there's higher likelihood this thing is going to continue to drop now. If it breaks back above 82.11, okay, then it's got some potential. But right now, I would not be even thinking about it. And it's still under the cloud. So Netflix is not something I would touch. All right, I'm spending too much time on these. Let's run through the rest of these very quickly. The ones with the blue flag are the strongest ones. Everything below. So out of 29 stocks that they mentioned, just 10, 1/3 of the stocks and ETFs that they mentioned on the shows are something that I would consider based on the technicals. Okay, and it's the list up here on the top. So let's look at those. We've got Chevron, CVX. Here it is on the weekly chart. Here it is in the daily chart. It passes all the tests. Now it is, again, you might say it's overextended, but if you look at the weekly chart, this this chart here has been in this downward channel for a very long period of time. It's just beginning to break through. And yes, it is above, quite a distance above the moving averages, but it also it's got some room, a little bit of room to run here before it reaches that level. And it might break through, but yeah, I would be very careful here. On the daily chart, it has taken off quite a bit. So maybe it makes sense to think about waiting for it to pull back just a little bit, come closer to the Tengensen, and then take a trade on it. That's the thing. You never really know because these things can just go sky high, and the ADX is very strong. The volume has been increasing. So I like CVX, and it's a strong sector. EMR is in the industrial sector, which is not as great currently. Here's the weekly chart, but I like this chart. I like it. Emerson looks good. I like the fact that it actually broke through the high right there. You see that? That happened this week. It was up 3.43% today. So there's always some shiny stocks, even on bad days like today. Here's Gilead Sciences. This one looks good on the daily chart, looks good on the weekly chart. 3 weeks in a row, it's just moving up. This is, again, look at the ADX. It's just started moving up. I think it has a lot more room to run. Okay. So GILD looks good. GLW looks great on the weekly, looks good on the daily, even though it's pulled back 2.75%. If we get a bullish candle here, that's going to give a nice buy signal. GSK, that one gapped up, was looking great even back here. Yeah. And it's moved up very quickly. And there's the ADX moving up, volume increasing. Here's the weekly chart. Big day, up 7.29%. MRK looks good. That's Merck. Now, Merck, we've been talking about these levels. I drew this one back on, wow, is it that long ago? My goodness. Huh. Do you see how it says created February 14th? I'm sorry, February 15th of 2004. I'm sorry, 2024. So let's go back to that. I'm just kind of curious to see where that level was. Ah, there it is. Somewhere around there, right? Wait. Um, February 2024. Okay, so this was a level right there. You can see that support level right there was where it came down, found some support and bounced, and then broke right through it. So that's interesting. And now it's reached that 120.30 level. It still has the momentum on its side. I don't know if it's going to break through, but it's certainly looking good here. That was a weekly. There's the daily. It's reached its target. I probably want to wait until it gets above 120.30 because you could potentially see a little pullback here. OIH is looking good. That's the Van Eck Vectors Oil Service ETF. It is so close to its monthly level. Let's look at that monthly level. So these, now that we switched it over to the monthly, you can see these individual little Japanese candlesticks. Each one of these represents 1 month in time. There's all the years that have passed by. And you can see how right here on that candle back on September 29th of 2023, that's circled. That is the high right there. So 364.08. Okay. That's what that level is right there. 364.08. Now, we are just under it. We're at 362.52. So if it can break through that level, I think it's got potential to continue running. There's a monthly, there's the weekly chart, there's a daily, and we'll see what happens here with OIH. Texas Instruments looks good. Here's the weekly chart. Let me see something. I'm just kind of curious. I think we need to throw on a resistance level though, right there. And the high there was 221.69. That's a weekly level. Okay. It is above it currently, but remember, it's just Wednesday, right? So we've got 2 more days. We've got Thursday and Friday, and this candle might end up closing under 221.69 by the end of the week. It's possible. So I would probably hold off and wait until Friday. before making a decision on this one. I want to make sure that's above 221.69 in the afternoon on Friday. That's just my strategy when I'm looking at some of these weekly levels of resistance. You know, there it is over there. It was also finding resistance back in November 8th of 2024. And then once we get above that level and close above it, we'll be experiencing all-time highs that basically close above resistance level, which makes it even more interesting and hopefully more profitable. Notice on the daily chart how it's been holding up above that level, 221.69. So just a couple more days. Let's see what happens with TXN. XLB, I think that Joe T, I think he mentioned that one. I think he jumped a little bit too soon on that one, but you know, we'll see. XLB, the materials ETF, that one came down to the 48.94, found some support and bounced. I like XLB as an ETF, daily, there's a weekly. Doesn't mean that the entire materials sector is strong though. This is just a small little group of stocks. There's about 26 stocks in XLB. I do a much more thorough analysis of the sectors and industries within the sectors in the weekend members only videos that I produce. So if you guys want to get access to the, this last weekend's video, the ones before that, and the upcoming video that's going to be coming out this weekend on Saturday, it will be either on Saturday or Sunday that I post it, then you probably should consider joining, and you can actually do it through YouTube, which is great. Real quickly, let me just show you how you do that. So there's my channel, Blue Cloud Trading. It's free to subscribe. Okay, we're getting closer and closer to 28,000 subscribers. So please subscribe if you haven't yet. Hit that notification bell. Hit the like button. It helps with the algorithm so that it can get out to more people and it gets pushed out more by YouTube. Now, if you want access to the members only video like this one here that I did, it's an hour and 11 minutes long, 4 days ago, you can access that. But once you've joined, what you need to do is click the join button. So you click join. This is what pops up. It says membership at the top. Join this channel. Get the access to the membership perks. You would need to select Blue Cloud Trader, okay, to get access to the video, to those strategy videos. If you want to get daily trade updates on the stocks that I'm buying and selling each day, Blue Cloud Legend, okay, and hit the join button. And you can also request stocks to be analyzed in upcoming videos. So there you have it. That's how you do it. Let's get back to the charts. XLB. I like XLB. So as an ETF, that looks good. XOM, beautiful, right? Do you see that little candle right there? I created that on January 13th, 2026, that little circle. The 126.34 level was created on January 11th. I said we need to get above that level. And guys, when we do, expect this thing to blow up. Why? Because again, when price is constricted in a tight range for a very, very long time, once it breaks through, you know, boom, it wants to expand. And there's the expansion that you see. And it's a lot of people just waiting, essentially. They're holding that position, they're holding, holding, and holding. And what happens is when they've got their buy stops waiting above that 126.34 level, and then it just starts to take off like crazy. That's what's happening right now with Exxon. So that's the weekly. There's the daily. Look at it. Psst, beautiful. Okay, so that's a nice move. Since it broke through that level, it's up 15.89%. It's just a short period of time. Now, the rest of these are not good. Okay, I'm not going to sugarcoat them, but they were talked about on the show. So I thought let's talk about them very quickly. I don't have to spend too much time on these because they are all bearish in some way or another. There's something off technically about them. And they might even have a nice update today, but there's something off. So let's look at this. ABBV is under the cloud. It's down 3.79%. It's obviously in a downward channel. Okay, do you see that? So nothing to do there. AMCR, this one broke above the cloud. This one's looking very bullish on the daily chart, up 8.10%. I like what I'm seeing on the daily, but the weekly chart is not there yet. So if you don't have confluence on both time frames, you're taking a higher risk, in my opinion, because you've got resistance right there. You get the cloud, which is that's a natural level of resistance, which actually coincides with these prior highs right there. Do you see those? Okay, so that's a problem. Then you've got that 200-day moving average on the weekly chart that's also declining. You're going to run into a problem right there as well. And what happens when sometimes, not always, like right over here is a perfect example. Price comes up to that 200, and maybe sometimes it lingers for a little bit, like it did right there, and then it drops some more. So that's why it's not an ideal spot to add a position, in my opinion. AMD, Advanced Micro, that was down 17.31%. Yikes. Look at that big drop. Under the Kijun on the weekly chart, but it's still a bullish cloud overall. Here's the daily chart. So that is not good. Not good. Last time I had a position in this was back here. You can see that I had added back on August 13th. I got out over here for 26.3%. It did move up a little bit more. And then what happened? Price came back up to that 267.08 right there. And this is why we use levels of resistance right there. Boom. See that high? Came right to it. That same exact level. Found resistance, created a reversal candle, red spinning top, pulled back, dropped into the cloud. Now what? I would not be adding position here. Okay, this is just look at the directional movement index. I like Bristol Myers on the daily chart. That's a pretty chart. There's nothing wrong with this on the daily. Okay, in fact, right there, it broke above that high. So it looks nice. It's up 2.91%. Everything looks great on the daily, but again, I like to look at both time frames, the weekly chart as well. And look where the 200 is. It's right there, just waiting. And the single span A is right under that single span B still, but it looks like we might get a break above. So I would watch it very closely, and if it looks like it's going to potentially break through that level, their earnings come out tomorrow, February 5th. You could make it or break it, depending on how Wall Street takes the information. Gold. We didn't talk about it yesterday, but let's talk about it today. Here's the weekly chart. Here's the shooting star. Okay, so it got back above the Tengen on the weekly. Look at the daily. Do you see how it's stalling right there at the Tengen? So I'm not convinced yet. And it was down 0.07% today, which is interesting, right? Because it gapped up in the morning. It reached that level of resistance, the green line, the 9 period, the midpoint of the last 9 periods, and then retracted. Stayed above the Kijun, and the ADX is just dropping. So the momentum is not there. Volume is drying up in gold a little bit. You see that down here. So I don't know. I think this might have been like a little fake out here, and I think there's potential for a pullback, further pullback. So, and that would be even worse for gold, because then, especially if we get under that low right there, okay, then what we'll have is a lower high from the prior one, and then we'll have a lower low. But we're not there yet. But I'm just saying, be cautious with gold. I wouldn't be jumping into that yet, personally. Okay, maybe there are some specific stocks within gold that make sense, but this ETF specifically, I would not get into. GLT. IBB is moving sideways. Nothing to do here on that one on the daily chart. It's under the Tengen, so I'd stay out of that one. IGV, software index, is under the cloud, still declining. No, thank you. JOTI's ETF. Okay, this one also has been in a very long consolidation here. Just maybe make it. Um, yeah, it's mostly been in this range here, so it hasn't really moved much either, right? So that's down 0.47%. It's still above the cloud on the daily. Here's the weekly chart. Just pretty much looks like the S&P 500 in Qs, right? Not a lot of difference. Eli Lilly up 10.33% on the weekly chart, broke above the Tengen again. That's a good sign. And the cloud is bullish. Let's look at the daily. I like the daily chart. The only problem with the daily is that the faster moving average, right, 9 period, the green line is under the red line. It crossed over here. Therefore, it doesn't get the blue flag. But I do like the fact that price broke above the moving averages. And it's on higher volume. And we're starting to see a little bit of bullishness down below here, the directional movement index. See how the green line crossed above the red? The white line is still not showing the momentum increasing yet. The other thing with Eli Lilly, if you look at this on a weekly chart for a moment, and let's draw another resistance level, that high right there of, okay, 1,133.95. Let's color it light blue. Because this is your world, folks. You can color it any color you like, okay? Personally, I like to color my weekly levels blue and my daily levels red and my monthly levels purple. But you can choose whatever color you want, okay? Sound like Bob Ross. Okay, and then you've got MTUM, Momentum Factor ETF. If you're not familiar with Bob Ross, you got to check out some of his videos on painting on YouTube. Just type in Bob Ross. If you want to relax and just chill, you gotta watch a little Bob Ross, okay? Either that or watch my channel. Same thing. Uh Momentum Factor ETF, MTUM. Look at this. All right. So it's been consolidating for a long time. There's no momentum. The MTUM. And here's the daily chart. Finding support at the cloud and almost touching the 200-day. Nothing interesting there. QCOM under the cloud on the daily chart. No, thank you. REGN, Regeneron Farm is they got Tenkan-sen under Kijun-sen, but we did have a little bit of bullishness here, up 2.09%. Chico Span is still underpriced though. Silver's still under the moving averages, the SLV ETF. It was up 2.88%. Yeah, it's showing a little bit of a recovery. Are these healthy looking candles though? Not really. What's interesting about these candles, you'll notice that they're all red, right? So all that means is that the opening price of the body is at the top and the closing price is right there. So all of them opened up higher and they closed lower. Opened higher, closed lower. Opened higher, closed lower. That means there's not a lot of conviction, in my opinion. Let's look at that 5-minute chart so I can show you what I'm talking about. Opened higher, okay, closed lower than the opening price. And the same thing happened over and over and over again. So yeah, price is recovering a little bit, but it seems very suspicious. Here's the weekly chart. It's holding up at least above the Kijun-sen. SMH, semiconductors, stuck on the Tenkan-sen. On the weekly, here's the daily chart under the both of the moving averages, down 3.94%. Finding support at that 372.78 level. Yeah, it's based on that candle. I think we have to actually redraw it because this is a new higher high right there. So that high right there is 375.59. Okay. And let's circle it so we know exactly what level we're talking about. It's that candle right there. So we broke above it, moved up a little bit. We came down, found support at that 375.59 right there. Continued up, came down, touched it almost. We pierced it briefly and stayed above it. So we might see a bounce, but no guarantees. And I don't like what I'm seeing again with the directional movement index. Look at this, red line moving up, green line moving down, ADX moving up, higher volume. Don't want to see that. That's just telling us there are more traders shorting this versus buying it. That's what that's telling me. TKO is above the cloud. Okay. But Tenkan-sen is under Kijun-sen, so no on that one. Uber, not looking good at all. Yesterday, it broke under that 78.31. It dropped another 5.15%. So stay out of that one. Look at the ADX moving up there. Not good. VWO is the Vanguard Emerging Markets ETF. If we look at this on the weekly chart, it's very strong. But if you look at this on the daily chart, it's been just holding under the Tenkan-sen. It's in the equilibrium zone here. Nothing to do, just a price wait and see. It's a wait and see approach, but we do have higher highs, higher lows. We're still technically in a nice strong uptrend overall in both time frames, but the price is under Tengensen, so it does not get the blue flag. Okay, XBI biotech is under the 129.12. Price is closed under the 9 period, so again that also did not meet the criteria that we're looking for. XLV up 1.25%. That's the healthcare ETF, but you can see it's under the Kijinsen still, so no on XLV. Let's get into the stocks from our members. IAT, I like this one. This is the iShares Dow Jones US Regional Banks Index Fund ETF. So here's the daily chart. We broke through that high right there. That happened yesterday. Here we are continuing to move up. Look at the ADX moving up. I like it. Here's the weekly chart. Like that too. Okay, so the regional banks looking strong. Where are we going to find resistance next? Most likely with this ETF. Let's see, where's the high there? 69.50? Nope, 69.71. Let's be very specific. There. And let's color it a light blue. Beautiful. Okay, and let's circle it too. Let's build a little tree somewhere in here. No. 69.71. So that's the next target level, and we are approximately 11.35% away from that target. So that gives you some room to run. Now, here's a proprietary ticker symbol that you've probably never seen before if you don't use TC2000. It's called IGX 1200. And this is unique, a unique aspect of the software that I use because it looks at the entire financial services sector, all banks. And if I select this right here, and I open that component watch list, there are approximately 402 items in this watch list. So it's not every single bank in the world, but 402 banks. And basically, look at this. All 402 of those are what's creating this chart. Now, this is not something that you can trade. Okay, it's just ticker symbol that represents all those that huge component watch list of over 400 banks. If you look at something like XLF in comparison, which is the financial sector ETF, and you open up that component watch list, you're only looking at about 78 stocks. So it's not a very robust description of what's happening with the financials. Okay. So IGX 1200 gives you a much better picture of what's happening. Weekly chart, here's a daily. This is the kind of stuff that I analyze in the member only videos. And every sector and industry has its own little proprietary symbol. And by the way, you can also get a $25 coupon for this software under the links segment right here. Click on 9 more links in Blue Cloud Trading. If you're interested in the software, scroll down right here, click on that link, and you can get a $25 coupon for TC2000. Okay, let's get back to the charts. So I like IGX 1200 here. MRK Merck. Look at this one in the weekly chart. I like it. We've got a bullish cloud. Price is above the 200 on the weekly chart, but look where it's finding resistance right at that 120.30. In fact, it touched it and dropped a little bit today. Here's the daily chart. So there is a possibility that we might see a little pullback, a short-lived pullback, most likely, and then maybe a bounce. So a lot of times what will happen is price comes to a level of resistance, it pulls back a little bit, and then takes off. Other times it might just drop right through that, like butter. So we'll see what happens. But right now the ADX is still moving up. Green line is looking okay. It's like actually sideways because it did stall there. Okay, but overall I like Merck. AEM. Basic material sector, gold. Again, gold, like I said earlier, it's kind of giving us some multiple signals here because it did move up slightly, but it's still stuck in between the two moving averages. So it's unclear yet at this point, in my opinion. I would not be adding positions here. This is more of a wait and approach situation. Here's a weekly chart that is still very bullish. So you can see how it's still above the Tengensen on the weekly chart. Okay, next, ILMN. Here is the weekly chart. Ooh, Illumina. So it reached that 200 day, multiple weeks now, and every time, boom and boom, and it gapped down, and now it's under the Tengen, down 0.92%. Today, here's a daily chart. It's going to find some support at the cloud, maybe another 2% drop potentially, and then maybe it will bounce, but maybe it could also just pull right into get sucked into that cloud and then continue its way down. So be cautious with ILMN. I would not be recommending it here. You can see the ADX is moving up. That's not good. And the red line is still technically above the green line. ITA is the iShares Dow Jones US Aerospace and Defense Index Fund. This one's been pulling back. Yesterday, we actually got kind of a little bit of a buy signal, but it wasn't like super bullish if you think about it, because see that candle? It was just kind of it was like a lackluster type candle. It wasn't really convincing. Like I didn't see a nice candle like that candle, you know? It just didn't move enough above that Tengen, and then it's kind of like stayed around that level and it dropped. So higher volume to the downside. The red line is moving up, green line is moving down. Higher probability is going to pull back at this point, in my opinion, tomorrow. Here's the weekly chart. I mean, see, I'm getting two different signals here now. So, like on the weekly chart, the longer term time frame, we're right at the Tengen. We're at a support level, so we could get the bounce. Actually, the weekly level is something that you should pay the most attention to, in my opinion. But yeah, it maybe in the short term we might see this thing pull back. I don't know. I mean, it's just we get a bearish engulfing pattern right there on the daily. We've got a spinning top here, but that's after a move down, so that's more bullish than bearish. What about MP? MP Materials Corporation. That one's moving sideways. Tengen is under Kijinsen. It's above the cloud on the weekly chart. Here's the daily chart inside the cloud. There's no clear direction here, so I would not be adding a position here. There's nothing to do, really. QLD is under the cloud. That's the ProShares Ultra QQQ. It's down 3.52%. Yeah, I mean, if the Qs are dropping, this is going to drop even more, right? Because it's the Ultra. So I'd stay out of QLD. Here's a weekly chart under the Kijinsen. We might see a continued further breakdown here in the Qs, guys. So watch out with this one. I'd stay out of that one. SLVR, Sprott Silver Miners and Physical Silver ETF on the weekly chart, stalling at the. Did it stall? Let's find out. It did stall, because if you look at the little box that pops up here that populates when I highlight this with the crosshairs, look at what it says there. SLVR, okay, closed at 67.59 at the top there, right? Look below. You see under it says Ichimoku, and then under there it says conversion. Conversion is another name for the Tengen, the green line, 67.63. So we closed under it right there, because it's hard to tell sometimes, but you can highlight and get the exact dollar amount right down to the penny. So it did close under on the weekly so far, but remember the weekly chart is still forming. This thing we don't know. It's still dynamic. We won't know until Friday in the afternoon, late afternoon, where this thing is going to stand. Here's a daily chart. Right now, it's not looking good. So notice how the silver miners and physical silver ETF looks even more bearish, because we had that pullback here. We had that little spinning top that led to a move up. It stalled once, twice. Okay, it just doesn't look pretty to me. I'd stay out of that one. Yeah, so we'll see what happens with that too. That's going to do it, folks. Thanks for watching. I know it's a long video, but there was a lot to cover in this video. Hope you enjoyed it. Don't forget to like, subscribe. It does help the channel quite a bit. That's the only thing I ask. If you're not planning on becoming a member, do that at least. And I will catch you all in the next video.